April 15th is almost upon us, and for most Americans that means one thing: tax day. Now that wasn't always the case, however. The first income tax in our country wasn't levied until 1861. At that point, the American government needed funds to pay for the Civil War, and each year, throughout the Civil War, Americans had to pay an income tax on their annual income. In 1865, of course, that ceased. There wasn't another income tax levied until 1894. It was the first peacetime income tax. Not all Americans were paying an income tax, however, because the tax only applied to American households that earned $4,000 or more. Today, that would be the equivalent of about $107,000. In 1913, with the passage of the 16th Amendment, the income tax became a permanent fixture in American society. You might say today that the Internal Revenue Service has some difficulty in collecting taxes, but they had a particular difficulty at the time because there was no withholding. It wasn't until 1943 when President Roosevelt signed into law the withholding of taxes from an employee's paycheck before he received it. Tax revenue swelled, and the number of Americans being taxed increased to 60 million at the time, the largest ever.